Welcome to another Roots Recap. This week, I'd like to go over the MOON ETF. The MOON ETF seeks to track the Kinsho MOON Index, which is an index made of innovative and disruptive technology companies. But because you can't invest in an index directly, Direxion has unleashed the MOON ETF, so you can trade it just as easily as any other stock. So let's get into it. First, I would like to go over their chart since inception. It's relatively new, coming out just before the end of 2021. And as you can see, right off the bat, it did very well, which isn't a huge surprise considering that technology in 2020 and 2021 was doing very well. However, since federal interest rates and other market news and situations have occurred, we can see that it's been on a rough road for pretty much all of 2021 into 2022. However, tech stocks have been making a bounce back, so I thought this was a good time to cover some of the options. And if you don't know which ones to go for, the MOON ETF makes that really easy because there's just a basket of them. You get a lot all in one stock worth about $20. And if we look deeper into that, we can see that their subsectors are primarily weighted in genetic engineering, autonomous vehicles, cybersecurity, electric vehicles, distributed ledger, smart grids, as well as many others. You'll see things like robotics or other innovative and disruptive technologies that are interesting and good for the future. Now, the point of most ETFs, mutual funds, and other baskets of goods like that is that they don't all have to succeed big for you to come out winning. Some of them will fail. Some of them will collapse. However, you are diversified and insulated from some risk in that way because you have more than one. Now, this is actually close to how Peter Thiel, a famous investor, does his investing. He looks for big growth companies and invests early on. Many of them will die completely. However, the one that really does pay off big makes up for the rest. Now, I believe Moonshot is probably trying to track something similar to that. And with the methodology that the S&P used, it's shown a 5-year return of 23% annualized. However, the S&P Moon Index just released last year, and it's much easier to pick winners after they've already won than winners into the future. So it'll be interesting to see how this methodology plays out. However, I think they have an interesting play, and I think personally that I'm big on tech. So this is one of the ETFs that I like to look at. If we look, we can see that it has, since inception, lost almost 15% of its value. So you could say not the best investment, and 52% in the last year alone. Now that's mainly because it had a peak at about this time last year, where it was trading at about $50 a share. So it's fallen over 52% in the last year, which is big. I mean, I don't think you'd be a happy investor. The NAV that you have here is the net asset value. Now, that's approximately the value of all liabilities and assets in the fund. So as you can see, it's quite close to the real assets that are behind it. So they don't have more liabilities or anything. And that's pretty common with ETFs. They don't tend to stray far away from one another. If you're a big tech bull like me, this ETF might have caught your eye. However, if you're interested in other ETFs or other stock news, don't forget to like and subscribe and tune in next time.